What's going on, guys? We got a new product to look at here today. Let's take a look at Crane Shares KLIP or KLIP and its juicy 57% yield as an income ETF. Now, it's going to be sharing a lot of similarities with other covered call ETFs that we cover here on this channel, but there's also some unique differences. So they're going to be doing covered calls or buy and write strategies on the Crane Shares CSI China Internet ETF, in addition to writing or selling corresponding call options on the ETF KWEB or KWEB. Okay, so first thing that immediately pops out to me is that Crane is doing options trading on an ETF that's run by Crane. This would be like if QILD started doing covered calls not on the NASDAQ 100, but on the Global X NASDAQ 100. At this point in the simulation, we have reached the point where ETFs now consist of one company that are actually synthetically owned, and now we have ETFs of an ETF by the same provider. So there's actually some good reasons why they're doing it on KWEB. Reason for this might be because KWEB actually has the second largest options market among Chinese ETFs. So there's always going to be some liquidity there, lots of volume, plenty of opportunities to get some juicy premiums. KWEB also has a history of heightened volatility, which means more options premiums. KWEB has a nice operating expense of 69 basis points, while KLIP's is 95 basis points. Seems like a genius move by Crane to double dip on those fees. But let's take a closer look at the CSI China Internet ETF. So essentially, this is an index of Chinese companies whose primary business is related to providing internet or internet technology. These are all publicly traded companies on major stock exchanges. So investors are getting exposure to internet company providers, and this is a really fast-growing demographic with the middle class in China. Remember, China has over 1 billion people, way more than the US has. In fact, retail web sales were $2 trillion in China compared to just $870 billion in the United States. Online shopping continues to make up around 25% and growing of all retail purchases in China. So if the internet ever went out or went dark or got censored, we'd have a lot of problems. But let's get back to KLIP. So they are generating premium income by writing options on the index that we just talked about. This is a great way to get exposure to options trading, which can be a very profitable strategy. The big hedge funds, the big Warren Buffetts out there, they're all practicing options trading to a degree. Writing covered calls may produce higher yields during periods of market volatility. The Chinese internet sector has historically been more volatile than its US counterpart, and this is important because a huge factor in those premiums which get paid out to investors as dividends is how volatile the underlying asset is. The more volatility, the higher the premiums. KWEB also has a higher implied volatility than other indexes that have covered calls done on them, and this includes on the S&P 500, on the NASDAQ 100, and the Russell 2000. When we go into the holdings of KLIP, we can see it has the vast majority of its assets in the ETF that it tracks, $84 million worth, with a good chunk of that change in cold hard cash as well. KLIP is very transparent in the calls it's doing. We can see they have an expiration date, a strike price, and exactly how many contracts they hold, as well as the market value. Now you might be wondering, why do these show up as negative numbers? Well, remember, when selling the call option, we receive a premium, but we're also giving up the right to the shares. We're giving up that upside potential if it hits a certain price by a certain date. We're making that contractual agreement when we're selling those calls. That means we have created a liability, as that's a potential obligation we may need to fulfill. That's why it shows up as a negative number. Now, KLIP is flexible in how it staggers its covered calls by doing them weekly, and they don't have all their eggs in one basket for one date. All right, now for what you really care about, the dividends. KLIP has been around since January of 2023, so still relatively new, but they have paid a dividend every single month since they have been incorporated. And these have been really juicy dividends. I would say these have been relatively consistent around that 85-cent mark for the past 4 months. And then before that, they were paying over $1 per share. That's where KLIP is getting this ridiculous 56% dividend yield from. So it's a little bit less than T-Slide, but this is a chance to get exposure to a fund not run by YieldMax. Crane shares have been around since 2013, and they're primarily focused on giving investors access to China through different investment strategies. If we take a look at their distributions compared to their share price, and then we take a look at that yield, you can see why Crane shares KLIP is so attractive to investors. Just in 1 month, you're already getting a 2.31% yield. When those dividends were extra juicy, you were getting a 5.35% yield in just 1 month. I mean, just keep in mind that even the juiciest of dividend stocks, they might offer a 5% yield for the entire year. Here, we're getting that almost every single month, 5.17%. And even in June, we were still getting a 4.46 yield. If we just keep compounding that, one could become an everyday millionaire in a relatively quick amount of time. Of course, at the same time, we want to make sure that share price isn't going down. This is what makes these income ETFs so attractive. Since KLIP's inception at the start of the year, they have lagged behind the overall S&P 500, 12.4% versus 19.2%. Although we know most of this year's gains have been primarily driven by less than 10 big tech companies. So the market really isn't doing that great if you subtract out those big outliers. Now, KLIP is also down 27% in capital appreciation, so really this means that most of the gains are going to be coming from dividends. Some would say that if you're getting paid out your dividends and the stock price goes down, you're not really eroding the NAV. I have some mixed feelings about using that logic, especially because one is paying taxes all along the way, at unfavorable tax rates, mind you. For those who want exposure to China, this is a great way to get some of that and diversify away slightly from America. By having professionals manage the ETF for you, it takes out the difficulty, the complexity, and the capital limitations of doing this by yourself. Just remember that KWEB appears to be more volatile right now than it has been in the past. So if the volatility ever gets back to normal, those yields are going to come down as well. Just because KLIP is paying a huge yield right now, that doesn't necessarily mean they always will. Combining KWEB and KLIP, this could be a great way to mix growth and income by getting exposure to the Chinese internet boom and then to also profit off the growth equities of the Chinese economy. Honestly, with a ridiculous 55% yield like this one could get their investment back in just 2 years, but that doesn't mean that there's no risk involved. This is just another card in the deck of exciting covered call ETF strategies out there for us. One way that Wall Street gets really rich is that they invest through private equity. Check out the video I just made on private equity and how you too can profit off of companies like Blackstone that invest in them right here. I also got a playlist of other income ETFs that are high yielding income ETFs all across my channel. Be sure to let me know what your thoughts about KLIP are in the comments below. Be sure to hit that like button for a small time YouTuber. My videos are always found in podcast form under the Collect Cash podcast name. Thank you to my Patreons who make this all possible. They get access to all my trades weekly and my full $155,000 portfolio, and I'll catch you on the next one.